Hello and welcome to the Virginia Retirement Mandate and the changes that are coming. Today we're going to be doing a webinar in regards to understanding your benefits and options between the RetirePath VA option, the simple IRA option, or the 401k option. My name is Kevin Kelly, financial advisor with the Wealth Cycle Advisor team. So we do comprehensive financial planning or investment advising, no matter what stage of life you may be in. Obviously, this webinar is geared specifically for small business owners, but if you know anyone that could be of benefit to listening to this webinar, certainly would be happy to send that out to anyone that would like to hear more about some of the changes that are coming with the retirement plans here in the state of Virginia. So jumping right into it, right, what is the RetirePath expansion and is your business affected? So a couple of things to keep in mind here. First is, one, if you have at least 5 employees, you are going to be impacted in some form or fashion. That is pretty much all of the businesses in the state of Virginia for the most part, right? For most businesses, unless you're a sole proprietor, have at least 5 employees. That does include part-time as well. So if you do have 2 full-time employees with 3 part-time employees, that still counts, right? So if you remember back a couple of years ago, the original mandate was 25 plus employees in the state of Virginia, but that is getting reduced to 5. So there's a lot more businesses that will be affected here in the coming months when it comes to the retirement plans that are going to be required now in the state of Virginia. Some other things that are required as well, you do have to be at least in business for 2 years, and you can't offer currently a retirement plan. So if you do already offer one, obviously that's a great thing, but now is a great opportunity to do some planning, make sure that the current plan that you have is still right for you, especially depending on the business that you have and whether it's growing or whatever the case may be from a business standpoint. Some deadlines to keep in mind as well, obviously, as the recording of this webinar is after July 1st. So what that means is that some of the rollouts in terms of how to register, how to set up a plan, any sort of exemptions that you may have, they are a part of this in terms of you probably have already received something. If you haven't, be on the lookout for it because registration is open for this new RetirePath VA option. Obviously, there are, like I said, lots of correspondence coming out in regards to that. But what we want to talk about today is from the planning side of things, which plan makes the most sense for you, right? We want to make sure that the plans that you have and the plans that we're utilizing make the most sense both for yourself as a business owner as well as the employees that you have from a benefit standpoint. So why is this important, right? Obviously, having benefits for your employees is a huge part of both employee retention as well as just being a company that people tend to want to work for, or lots of times people these days aren't necessarily just looking for the highest salary, but what other benefits can they offer, right? And so retirement planning, is a huge part of that, right? Just some statistics here, 56 million Americans currently lack access to a workplace retirement plan. That is far too many people. You should absolutely have the ability to plan for retirement through work. It just makes things easier because as you can see that employees are 2 times more likely to plan for retirement when it is offered through work. Just makes things easier for them. Obviously, they would love to have any sort of matching options, which we'll talk about what that means here in just a minute. But it's very important for Americans this day and age to have a workplace retirement plan that they can contribute to. The other thing that we want to talk about is the penalty risk that comes with the new state mandate, right? There will be a $200 per employee per year penalty that comes if you are not offering or not staying compliant with your retirement plan. So it's vastly important that you make sure that you not only offer one, but have one that makes the most sense for you. So when we're looking at the different options that come with a retirement plan, the first one's going to be the RetirePath VA one. So that's the one that you're probably going to hear about in correspondence with the mandate because it is the state mandated plan that is offered, right? So as we'll go through each one, you'll see the pros and cons to each one. Certainly not going to tell you on this webinar which one makes the most sense for you. What you'll see at the end of the webinar is an opportunity to either book a time on our calendar or get our contact information so that you can learn more and sit down and we can hone in on which one exactly makes the most sense for you, both in the short term in terms of getting something in place, as well as in the long term based on what your business goals are. Well, as we're taking a look at the pros and cons of each one, certainly the RetirePath VA, some of the pros are there are no employer contributions that are required. So if it's something that you're not necessarily looking to throw in any of the profits or any of the revenue that you have for yourself as a business owner and pass those on to any employees, you're not required to do so. It is state managed, so there is minimal administrative burden from the standpoint of the different things that come along with a retirement plan. Obviously, there's going to be some administrative both costs as well as different things that you'll have to keep track of. It is free to implement for employers, and it does, of course, satisfy the Virginia mandate. Some of the cons, however, though, there's lower contribution limits, so it is very similar to having an IRA, what's called a payroll deducted IRA. So the maximum that you can put into those is only $7,500 a year for each employee. So not something that if they are decent earners or high earners, they're not going to have the ability to put large sums of money away for their benefit. There's obviously very little flexibility when it comes to customization of the plan in terms of the options and the flexibility that you have from the standpoint of being able to offer different, whether it's investments or just having someone there to help with some of that customization. There is no employer tax deduction benefit as well. That is one of the huge things that we will talk about towards the end of the webinar is with the new Secure Act 2.0, some of the tax benefits that come with starting a plan for the first time if you haven't done so. As I mentioned before, there's obviously limited investment options. And then one of the key things is you don't have access to a financial advisor in any way. It's a state-run plan. So if anytime your employee has a question or needs some help with things, they're going to have to come to you as the business owner to help with that planning. There is nobody else that you can call, right? There might be an 800 number that you can give them, but that's about it when it comes to the access to a financial advisor or any sort of person that can help with any of those needs. Now, the second kind of plan that is available is what's called a simple IRA. Now, it does have the name simple in it. Because it is fairly simple from both a setup standpoint as well as all of the bells and whistles that come with it, right? It's fairly low cost in terms of the setup fees and things of that nature. So some of the pros, there are higher contribution limits, of course, than the RetirePath VA. That's not set at just the $7,500. You can contribute up to $16,000 in this type of plan. The employer contributions are tax deductible. One of the cons, however, is that employer matching is required in a simple IRA. So if that's something that if you want to have the flexibility to be able to control whether you have any sort of employer match, the simple IRA may not be the best option for you because it is required, but it is tax deductible if that is something that you decide you want to do. As I mentioned before, it is super easy to set up, and there's no IRS filings that are required for this. It's obviously a better tool in terms of just using the state mandated plan, which is basically the bare bones minimum when it comes to being compliant from a retirement standpoint for your business. But it's the next step up, right? It's not a full-fledged 401k plan like we'll talk about in a second, but it does have some benefits that I'm sure your employees would love to take advantage of if this was the route that you decided to go. So there are some penalties as well. So I'll talk a little bit about some of the cons. There is a 10% early withdrawal penalty in the first 2 years. It's not available to businesses with at least 100 employees. So I know most of the people probably listening to this webinar are for smaller businesses, right? You likely don't have 100 employees. And if you do have 100 employees, you've probably already set up a retirement plan for your business. But if for some reason you haven't, this one would not be available to you if you do have 100 or more employees. And then there's probably less plan flexibility from a design standpoint in terms of all the fun tools and bells and whistles, as I mentioned before, that would likely come with a full-fledged 401k plan. So when we take a look at one too far. When we take a look at the full 401k plan, obviously the biggest pro is the maximum flexibility that you have from a retirement standpoint. It's also, so one of the things, the highest employee contribution limits for 2026, that contribution limit is $24,500. That is simply the maximum for the employee side. They can then, in addition, get even higher from the employer match if you do decide to do some sort of employer match for your employees as well. Super flexible when it comes to plan design. So you're able to add in things like the ability for your employees to contribute to the Roth 401k versus a traditional, right? And there's obviously the tax benefits that come with having both the flexibility to choose traditional or Roth, especially if you have employees that are fairly different in terms of their income levels. There may be some benefits to having both of them available because different employees that make different incomes may have different needs from a tax standpoint. Also, there are loans that you do have the ability to offer as well, so that an employee, for some reason, they do have any sort of hardship situations where they need to tap into some of their 401k before they retire, they'd have the ability to do that through loans without having any sort of penalties that come with that, obviously needing to pay those back over time, but it does give them the flexibility to touch that if that is something you're interested in, as well as putting things like a vesting schedule on as well, right? The importance of vesting schedule is to help with employee retention, right? So if you have employees that are maybe a high turnover rate, you have the ability to put some vesting schedules on there so you're not putting a good portion of your profits to people who aren't planning to work for you long term. There also are significant employer tax deductions available. Like I mentioned, we'll talk about that in a second in terms of all of the tax deductions and tax credits that you're able to get as a business owner by offering a new 401k plan. And of course, obviously, it's the strongest recruitment tool from an employee standpoint when it comes to retirement plans, right? Most people have heard of a 401k before. It gets them excited from the opportunity to be able to contribute to something for their retirement, whether they're just getting started into the workforce for the first time, or if they've maybe had some old retirement opportunities at previous employers. They certainly like to continue to have that ability at their current or new jobs moving forward for those employees. Now, obviously, there's cons to 401ks as well. There are a bit more from a higher setup and administrative cost standpoint. Some of that does go away with the tax credit and tax deductions, but it does cost a little bit more to set it up because there are more bells and whistles, right? The higher the value you get with something, likely the higher that it is from a cost standpoint. Also, it does require a third-party administrator. That's something that an advisor can help with. We certainly have the tools, resources, and the connections to be able to help with setting that sort of stuff up. So not something that's necessarily placed on you from that burden, but something that we can certainly help with. But again, something we have to keep in mind as well. There is also the annual IRS Form 5500 that is required to be filed. Again, something that we help with when it comes to plan design, as well as just the administration that comes with the plan, something that we'll want to keep track of each year. But all in all, obviously, this was the one that you get the most bang for your buck from a value to cost standpoint. And it also has the ability to be able to put quite a bit away for both you as the business owner, employer, as well as all of your employees as well, with the benefits of the tax credits and those sorts of things. So, which plan fits your business, right? There's really three options, and ultimately finding the path that makes the most sense for you really has a lot to do with the goals that you have for yourself as a business owner, the goals that you have for yourself personally, as well as what your business looks like a little bit more long term, right? Sure, you want to get something in place sooner rather than later so that you maintain compliance of the new Virginia state mandate. But you want to make sure that you're doing something that's not just a short-term fix that could cause you problems down the line, right? So we want to see kind of what your goals are, what you're looking to do from a business standpoint. Are you actively growing? Are you a newer business that's just getting started, not quite sure where you're going to be 5-10 years from now? Or do you have things really in place from a goal standpoint of where you're looking to go and where you're looking to plan from a business standpoint? So we can certainly sit down with you and help determine which path makes the most sense, as well as who you should get in touch with and how we can help depending on that path that you decide to take. So going back, just a snapshot of each one. Obviously, the RetirePath VA is the compliant thing that's offered through the state. It costs basically nothing from that standpoint, but the state handles most of the administration or all of the administration of that. They don't have a lot of help from any sort of advisors or anything like that. The simple IRA, sort of the balanced approach, right, may not get as much from an employer investment standpoint. There are some tax benefits and there are some higher limits as well, but it's not exactly what a 401k can offer, right? Which is the maximum savings, the full flexibility, the full allotment of investment options, and of course, the name that comes with being able to say, hey, we offer a 401k plan as a business for both your current employees that you're looking to retain, as well as future employees that you're looking to hire on as well. So, some key takeaways. Obviously, the Virginia mandate is real. I know many people either haven't heard about it or maybe didn't think that it was a thing that's actually true, but it is a real thing. So, if you do have at least 5 employees in the state of Virginia, those deadlines are coming. Okay, we need to make sure that we are getting things in place and starting the ball rolling now so that you're able to have things in place before those penalties start to come, likely at some point next year, even though they haven't necessarily told us exactly when those penalties will start to hit. But you don't want to be sitting around wondering and trying to avoid those at the last minute. Obviously, one size doesn't fit all, right? Every single business is very different out there, right? From an employee number standpoint, from a just how your business is run standpoint, your profits, all of those sorts of things. So finding out what your goals are, what you're looking to do from a business standpoint is really what's most important, so that we're able to help you get the right one that fits yourself, like I said, both in the short term as well as the long term. Now, yes, of course, we always want to stay compliant, but the benefits do go well beyond a compliance standpoint, right? We want to make sure that your employees are happy with the plan that you have offered, gives you a competitive advantage through like-minded or similar other businesses that might be trying to attract and retain the same type of talent that you are. So we want to make sure that those plans are in place for you. And as I mentioned before, obviously we want to act before the deadline. We don't want to start to see those penalties come up just because we either dragged our feet or decided we weren't ready to do it. Let's get the ball rolling now so that we're able to get those things in place for you well ahead of time if we're able to do so. Now, I mentioned one of the slides, actually a couple of the slides previously. I mentioned the tax credits. So the Secure Act 2.0 came out a few years ago. It does have the ability to offer these tax credits for businesses that are looking to start a retirement plan for the first time, right? So these tax credits, remember, are for new plans, right? So if you do already offer a plan, hopefully maybe you've gotten to take advantage of these tax credits already. If you haven't, it's still important to at least know what these are. So for those people that are starting one for the first time, though, these are what some of these tax credits are able to do for you. So you see there is on the left side, obviously, tax credit for a plan setup. So this will be obviously a brand new plan for the first time. You are actually able to get up to $5,000 per year for the first 3 years in terms of setup costs, right? And in many cases, that will cover a vast majority, if not all, of your plan setup costs. Obviously, that depends a little bit on the company, the number of employees that you have, but you do have that ability to use that as a tax credit. Remember, it is a tax credit, not a tax deduction. So tax credits are dollar for dollar matches of what you owe to your taxes. So it's a very important thing to be able to take advantage of that. Work with the accountant that you have who does your bookkeeping or however you normally do your business accounting and tax planning to make sure that they are utilizing the advantages that come with this when we do set up a plan for you for the first time, because that can save you a lot of money over the first 3 years of the plan. You do see that credit does lower a little bit, phasing out between up to 100 employees. So obviously, if you have, again, a business that is over 100 employees, you're not going to be eligible for this. But in the likelihood that you have 100 employees, you've probably already set up a plan already to begin with. So the other thing, obviously, is the employer contribution side of things from a tax credit standpoint. So this encourages employers to make sure that they're making contributions for the employees' benefits as well, right? So those matching contributions that you're able to put in. The benefit there is that for anybody that is not what's considered a high earner, so anybody that makes less than $100,000 in adjusted gross income for their year, any of those employees, you're able to get a tax credit for up to $1,000 per employee from a, like I mentioned, tax credit standpoint, to help you on taxes so that you're able to still match the employee to make the employee happy, of course, in terms of getting an employer match, but it doesn't overly burden you, especially if you're a newer business who's just getting started, still looking to grow and maybe feel a little bit on edge in terms of how to best utilize the matching side of things if you don't know that you necessarily can. the Secure Act 2.0 tax credits will certainly allow you to be able to still utilize that match by getting some of those tax credits back, right? So $1,000 per employee is quite a bit, right? And so those obviously phase out as well, just like the startups, and is completely phased out if you have at least 100 employees again. But it does certainly help offset some of those mandatory contributions that might come with setting up a plan like this. Certainly something that you want to make sure you're taking advantage of. Certainly something that we want to talk about this with your accountants, like I had mentioned, so that when we're doing your tax planning for the next year and future years, you're making sure you're getting the tax benefits that come with this when we start to set up your plan for the first time. Now, next steps are, let's choose the right plan for you, right? So certainly would love for you to schedule a call with us. On the next screen, there's going to be a QR code that you can scan, schedule a time to meet directly with us to talk more about which plan might make the most sense for you. If you just have questions specifically about your options and you want to sit down with us a little bit and talk further about that, we'll certainly do a consultation for you to review those. We'll also do a complimentary plan assessment, right? If you already have a plan, we would love to be able to sit down and review that with you as well, make sure it's still the one that fits best for you from a business standpoint and an owner standpoint, as well as an employee standpoint, because many times we notice that if you've set one up 2, 3, 4, 5, 10 years ago, there's a chance that you either maybe outgrown that plan, or there might be some benefits now that we can add into that plan that you may not know about currently. So it's a great time to obviously do a plan assessment of what you currently offer. And if you have the perfect thing already in place, then that's fantastic, and we're really happy about that. We'll be the first ones to tell you that if everything looks good from that standpoint. So something that you can just do to make sure you're maintaining your compliance as well, to make sure you're reviewing your plan on an annual basis, as if you've had a plan before, you know that you're required to do that at some point as well. And of course, for those people that are starting one up for the first time, want to make sure that you're maintaining your compliance from the new state mandate. So let's make sure that we get something in place for you sooner rather than later. As I mentioned at the beginning, my name is Kevin Kelly, financial advisor with the Wealth Cycle Advisors. If for some reason you haven't met with me before, but got contact information here on the screen, certainly feel free to schedule a time to meet with either me or one of the guys on my team. We would be happy to help you. Certainly check out our website as well. You can give us a call at our phone number as well. Our website also has the ability to book some times. You can see some of the other opportunities and options that we offer for both business owners and just individuals and families. If you're looking to obviously take advantage of the opportunity to look at your retirement plan options through your work now, we can also help you from a personal standpoint, or if you know anyone else that needs some help from a personal standpoint, we would be happy to help as well. But certainly appreciate you joining us for this webinar, and we hope to talk with you soon. Thanks a lot.